Good morning, traders, and welcome to this Thursday's live trading webinar. For those who join us for first time, my name is Theo, and I'm here to go through the market analysis and the news analysis. So I hope everyone is having a great time so far. Wherever you are in the world, good morning, guys. As usual, our risk rewarding to make sure that everyone understands this webinar is for general information only, without any intention to provide any personal or financial advice to anyone. Guys, for those who are new here with us, please understand that we do have this weekly trading podcast. I record them every Monday. You can either play them directly from the website, or like most of the people, they download them on the Spotify, Apple Podcast, Google Podcast, and so on. I will share this link with you to make sure that everybody is aware of that and everybody uses it, because it's really too much value out of this. And also something I didn't mention for a while, the Instagram page. Please make sure you follow us on the Instagram, as we put on a daily basis reels, stories, content, some TikTok videos we shared here, but everything has to do with trading and investing. All right, so let's have a look at today's top headlines. Markets looks like they're going to slow down a bit due to not any major news events for today, as at least that's per the calendar. Okay, we had the unemployment rate in Australia with some slowdown in the number. So we'll see how the Australian dollar will perform, but we'll see that when we review the charts. So today's top headline: US could default as soon as July if debt ceiling stands for ease and resolved. Standard Chartered's fourth quarter profit rose, lifted by higher interest rates. Italy's Silvio Berlusconi acquitted in sex scandal trial. US and EU advanced buyers club for EV battery minerals. EU starts discussion on new export ban sanctions against Russia. And crypto giant Binance expect to pay penalties to resolve US investigations. That's interesting. If we go to the charts, let's start with the euro against the dollar. Guys, if you have any pairs you would like to see today, something different than what we do on a daily basis, please let me know here. So I opened few positions today. The one, it's the pound against the US dollar, because I kind of like this pattern here. And of course, I use the ATR. And as I mentioned, the way I put the ATR, it's a bit different than what you're going to find on the internet. So if this is 120, 130 pips, let's say ATR, it means the average range of the last 14 days of the price action was about 130 pips. I would like to put the ATR, I would like to use half of this number. So if I increase the probabilities that within a day I will get a 2-to-1 reward to risk, and then I will see if I'm going to manage the trade, or I will let up for 3-to-1, or that the next area of support or resistance, depends on the direction. So that's what I do here. I enter somewhere there, then I have 65 or 70 pips stop loss, and my take profit, it should be much lower. So I will move it down. Then the euro against the US dollar, pretty much around this area of support now. We will see US dollars news this week were very positively favorable. The US dollar, we saw a rally on the dollar, so maybe the market likes to follow through. Next, it's the dollar against the Swiss franc. We discussed about this area of support, and for FIB traders, if you use your FIB tool, I believe you are about 61 or 50% here. You are rejected the 61.8%. Remember when we draw this trend line, I said that the price most likely it's going to come to retest this broken trend line as a new support before it was the resistance. As everyone can see, we have this trend line act as resistance in multiple times. Then we have a break, retest at support twice, rejected around 50 and 61.8% respectively, and is trying to make its way to the upside. I didn't initiate any trades here, to be honest. Australian dollar against the US dollar. Finally, we can remove this trend line here as the market went into this area of either head and shoulders. If we're going to see head and shoulders here develop, or if we're going to see a range, we don't know unless we have the points on the chart indicates what the price action will do. USD JPY, it's going to be after a while. I'm still very against this pair, very similar to the US dollar and the euro, to be honest. Yeah, around the, but that's more choppy. It's within a support and resistance moving averages, so nothing that I have bias on that. We are hovering around this area of support and resistance. We see that the market respects the dynamic 50 period moving average here in multiple attempts. It didn't break to the upside. Again, a strong US dollar can push this market also to the upside. We experienced some strength in the Canadian dollar the last few weeks, so we'll see if the market is gonna like it. From this point here, we had some, let's check the 4-hour. Yeah, this order block here was an area of possible buys for traders. They use this, and let's go to the Japanese yen, US dollar against the Japanese yen. We broke above this area of support, of resistance. Finally, we are approaching this area. The market still have room to move until this area of resistance, so that's our next opportunity. If we go down to the 1-hour chart, let's say, or 4-hour charts, we can find some trend lines or moving average. They rejected, so we can trade some cycles here, some waves. It's bullish, the implication, at least for a while, but again, we are really entering in a seller zone. Now, in a seller zone, most likely we can experience some sell-off, but at the same time, maybe the buyers are very aggressive and they want to just surpass this area. Aussie against the Japanese yen, we make this higher high, not very clear, really. There is an area of resistance here, there is an area of resistance there. It's this area of resistance. Maybe the market it's going to reverse, who knows. And the problem we identified in the market, if you already noticed, if we don't have impulse moves, that price it just move aggressively to one direction, and it makes those very small retracements, very small impulse and deep retracements. Everywhere there are resistance levels along the way, everywhere, because every impulse move, it has a resistance and a support at the top and at the bottom. So it doesn't really leave us room to move as retail traders due to the fact that we need some confirmation before we get into some trades, right, guys? And that's why patience in retail trading is, I will say, it's the enemy of the trader. It's not the most important thing. It's not just important, it's the most important thing, but unfortunately it's trader's enemy. It's patient at the end of the day. HB, would you explain again what is an order block? I can explain it because I didn't explain it so far. I just mentioned it, and I understand many people, they ask to explain. Guys, if that's okay with you, I will just take some time in this session to just for 5 minutes to explain the order blocks. Janet, can you please use the webinar chat area to type your question, because I can turn on the microphone and you can talk. Sounds a bit selfish from my side. Yes, it's like I'm the only one who talks here, but no, nothing at all. It's true that I'm the only one who talks here, but I can, I'm very, very dedicated to read carefully your questions and answer them, guys, okay? So what is an order block? As the word said, it's a block, okay, with many orders. So imagine a candle like this. Okay, my drawings are really bad, so let's make it a bit nice. Actually, let's say we are in an uptrend, okay? Let's say we are in an uptrend like this. And then we have a downtrend. All right. So what is an order block? An order block is the origin. First, we start where we are. Before we say what is an order block, first we identified where we can find the order blocks, and we're going to give them definition according to where they appear. All right. So an order block will be identified only with high probabilities. Okay, I mentioned that it's crucial within trending markets like this one here. We have higher highs and then lower highs, lower lows. So we have this move to the upside, and then the market is clearly trending to the downside. Then we want to find the origin of the move, and always the origin of the move is the last candle of a different color before the new trend development. I repeat that. In the simplest format, the order block will be identified where you will see in a downtrend, the last buyer block, the last buyer candle, okay, prior to the beginning of this downtrend. So, and what makes a valid order block? In our candlestick trading, we're going to say a bearish engulfing candle, it's a very strong order block. In bar, let's say this gravestone or this shooting star, if it has a little bit of body, or if you just use one name, it's a pin bar. Sorry, wrong area. Apologies. Stay with me here. Instead of this, if we had a pin bar here, and then we had a bearish engulfs the body, we can say that the high and the low of the pin bar, it's a part of the order block. Okay, so this, and why we identified them as an order blocks, because it's the exact, or inside bar, yes, whatever reversal, that's why I put it more generic, the reversal candle prior the the next candle that indicates the beginning of the trend. It's identified as the candle, as the area with so much of trading activity from big traders, hedge fund, institutional traders, that they created the move in the market. All right. And there are some things behind, because many institutional traders and all this stuff, due to the high volume and they trade, and due to their trades can actually move the foreign exchange markets. Okay. They don't necessarily use leverage like we do, so they don't necessarily need to put stop losses in the market, because they can just keep going and they have enough funds to do their trading, to cover their trading activity. So there is a theory that when the market will come back to retest this area, if the buyers, they're going to appear here and they continue to push the price higher, there is a very high chance that this area here can act as a very, very strong resistant area. So what retail traders do, and professional traders, and many traders, let's generic it, they just place sell limit orders within this area, sell limit orders. They are stop losses somewhere above the high of this area, because why is that? If the market is gonna passes through and penetrates this area of resistance, and it's gonna create a higher high, it means this trend now is invalid. We want to get into the continuation of this downtrend in a better price as possible to be filled. So they put sell limit orders here, hoping the market, when it comes here, it's going to reverses to the downside. That's what is an order block. That's where you can find, and that's how you can trade it. Okay. So and something, now we know what is an order block. If we go back to our example here, to the US dollar against the Canadian dollar, again, we use this mostly in trending markets with high probability, but I know there are many traders, they use it also on ranging markets. So this is a very recent example here. That's the last seller's candle before the beginning of a new uptrend. This one here. So this is a daily chart. Traders, they go down to the 4-hour chart and trying to find the very a smaller, let's say, range, and it's this candle here, this seller's reversal candle. So the high is here, the low is there, and many traders, they just put orders, buy limit orders here, stop losses maybe outside of this area, or they put in the 50% of this range here, they put their buy limit orders, and that's how they trade. Okay. Other traders, they use 4-hour charts as their charts to find order blocks, and then they go down as low to the 15 minutes, 5 minutes, 1 minute chart, and try to find very tiny small entries. Okay. I know many traders, they combine it with the Wyckoff's analysis, again, powerful technical analysis. But guys, put it that way, in trading, everything works as long as you are consistent and applied it with discipline, and you have patience. All right. So pretty much that's it. Let's move on. Canadian dollar CAD against the Japanese yen. Yesterday, we had this trend line drawn. We have the webinar, this live trading. I think we were somewhere here. And I said for traders, they're going to be around, use this. You can use this trend line if you find some price action reversals here, like it was this one at the New York Open. And it's a Canadian dollar, so it's very good to trade the Canadian dollar around at the New York session instead of rather than any other sessions. Okay, for those who don't know, the powerful of the trading sessions really with the pairs, I can dedicate some time and explain you what is best to be traded in general during each session and what to look for, especially for traders they trade on London session and New York session. You have to, guys, be aware that if the market, the currency pair already moved and it's very close to the ATR or 10-20% close to the ATR average true range, then for intraday trading, maybe it's better to look at something else. Okay, these are important things we're gonna talk about gradually. All right. So this one here, it was a really good opportunity, I believe. So I didn't take it. I wasn't around. I wasn't looking even at that one. Okay, it's not just I wasn't around. Even if I was around, I wouldn't be looking at that one. Just I'm really honest with you. But for traders, they trade on the hourly charts and the candlestick pattern. This is like textbook example. I mean, you enter there, you have a stop, let's say 15 pips, 20 pips, and you go to minimum 40, 60 pips and 2 to 1, 3 to 1. That's simple as it can be. Gold still on the free fall here. We came within this order block zone. Here it's an order block. Okay, it's the last bearish candle before a new development of the uptrend, but there is room for the price to push lower, I believe. Crude oil, nothing really here. It's just hovering around, and gas around this range. It's been 2 weeks now. Silver strictly follows the gold. There is, if you want to put some levels here, we have this area of support. Very nice level here. That's a weekly order block, this black candle here. If you go down to the daily chart, you can see that the market has this order block here, the most recent one. Then it has this order block here. If we keep going down to lower time frames, up. Where are we? We are somewhere here. So yeah, the market has this order block area here. This is a very strong area of support based on this price behavior. So if you are bearish here, be mindful of that. Maybe you can take some profits if you believe it's good to do it. Bitcoin yesterday, massive explosion to the upside, although I thought that it has more room to come and retest this area. Market had a totally different opinion about that. That's okay. So this trend line resistance on the euro against the Aussie helps for some sales. Let's have a look at the indices. DAX 40. Yesterday, we had this bullish engulfing candle to the upside, although we are approaching this area of resistance, strong area. Let's go down to the 5-minute chart. These are the pivot points of the 4-hour. So which one is the low? Okay, that's exactly on the S1 pivot. And it's this one here. So from this point to this point, it's 6 to R3 is 20. That's the one. Remember, guys, when one of the two orders get triggered, we cancel the pending one. Okay, just remember that. Nasdaq still on this bullishness. The daily chart, 5-minute chart. Let's see if it's gonna kick with some bullishness there. David traded GU and EU. You mean pound and euro short several times yesterday. He made over 2% profit, 5 minutes. Well done. Perfect. That's very good. Guys, anyone traded something else yesterday except of David? You can let us know here. Now price touches the pivot point line. Usually in an uptrend, after the R1, when we reverse and retest the pivot line, we have some push to the upside. And because I'm testing something lately, if this one here go to the R2, I'll move. I will use this for a false break if the market is going to take this swing point here. Most likely we can see a push to the upside and surpasses this area. So by the R2 we can take some good trades. If not, I'll still have this pending order here. Again, that's the DAX 40 5-minute chart. FTSE, it's an uptrend. We have this area of resistance. We don't know if the market is going to respect it or not. But we have these higher highs. Let's go to the DAX to see what it's going to do. Australian dollar, Darshan, we talked about the Australian dollar against the US dollar. Let's see if we're gonna break aggressively to the upside, or if we're gonna have a false break. Who knows? We manage our risk accordingly. So if we're gonna make this higher high, and if it's not gonna be a false break, then at R2, it's gonna be a good area to lock some profits. Hopefully it's not going to be a false break, but if it's going to be a false break, guys, up, I'm done for the day. Close, more than 10 pips. The one was here, so it was 19, and the other was here, it was 15. So another good trade for the day, right? Good DAX trade. Thank you. You're very welcome. Rumer, that's awesome. You love that footsie, don't you? Okay. Okay, guys. Another good day today. For those who haven't closed the trade, still some good profits. Please remember that when we do scalping, still going, that's fantastic. When we are do scalping, we want to get our profit while the move it's on the impulse and not when we start seeing reversals. Okay, traders, that's all from me today. I hope you have a great day ahead. Happy trading, and I look forward to see you again tomorrow at the same time. Thank you so much.